The room falls silent as the latest numbers flash across the screens, and we cut in now with urgent developments that could resonate across global currency markets. The Vietnamese Dong and the Iraqi Dinar have both surged unexpectedly against major global currencies today, prompting speculation, excitement, and intense scrutiny from analysts, traders, and ordinary savers. What we're seeing is a sudden, sharp appreciation in both the VND and the IQD, and the financial world is asking, could this be the long-awaited revaluation, the so-called RV? Our correspondents and economists are scrambling to interpret the implications. This is a developing story, and while the magnitude of today's moves is clear, the motivations remain murky, subject to geopolitical shifts, central bank signals, and speculative pressure. In Hanoi and Baghdad alike, markets are buzzing. Dealers in local exchange houses report a deluge of inquiries as individuals and families swarm to buy foreign currency or local currency, depending on which side of the surge they see as advantageous. Transactions that usually take minutes are dragging on as checks are made, rates confirmed, and calculations double-checked in what feels like real time. There's a tension in the air, a palpable sense of urgency, as though the slightest change in sentiment could send the Dong and the Dinar even higher, or reverse the move entirely. Financial desks are flooded with messages, WhatsApp threads and Bloomberg chats humming with speculation and caution. Is this a genuine shift, a planned monetary reset, or a fleeting wobble? Over in regional central bank circles, there's an undercurrent of unspoken concern. Will Hanoi or Baghdad step in to moderate the momentum? Will they signal intervention, or will they let market forces play out? In both countries, monetary authorities have historically managed their currencies with a delicate blend of policy tools, not dash surprises, but today feels different. Across both capitals, quiet meetings are underway. Economic advisors and central bankers are convening urgently, poring over data on foreign reserves, inflation forecasts, export-import balances. They are weighing the costs of intervention. If left unchecked, sustained strength in the Dong or Dinar could damage exporters. Yet at the same time, letting the currencies rise could curb inflation, ease import pressures, foster confidence among local savers. It's a high-wire act. On the trading floors, intermediaries at Hong Kong, Dubai, and Singapore exchanges are noting rising bids for VND and IQD. Some hedge funds are piling into positions, hoping to ride momentum. Others are stepping back, wary of getting caught in a squeeze if central banks decide to stem the tide. Among these traders, there's talk of coordinated moves, of whispered conversations between speculative desks. But until someone spots a memo or hears an official signal, it's all conjecture. Meanwhile, embassies and expat communities in both countries are watching warily. Remittances, always a lifeline for Vietnamese and Iraqi households, may suddenly shift gears. Families waiting for money flown in from abroad want to know, is it better to transfer now, at current rates, or wait on speculation that rates might settle even higher, or crash? Behind the scenes, economists are weighing in. Some argue this could be the beginning of a managed appreciation. Perhaps domestic policymakers are testing the waters, or nudging exchange rates toward more realistic levels. If true, this might be part of a shift toward more market-based frameworks, a signal to investors and exporters that flexibility is coming. Others caution that without official confirmation, we may be witnessing a speculative paroxysm, an abrupt repricing driven by sentiment, rumor, or technical triggers. In such a case, the thing is fragile, vulnerable to being reversed at any moment by a statement of intent or even a leaked discussion between treasuries. The concept of an RV has long had a mythic quality among currency circles, a sudden revaluation after years of stagnation. Today's developments rekindle that narrative, but experts warn, narrative alone doesn't move markets. Investors are divided. One cohort sees this as a rare window, perhaps a generational opportunity to convert Dong or Dinar holdings into stronger assets, or to ride an upward wave of appreciation before policy forces close the window. Another cohort is deeply skeptical, recalling past bursts of speculation that fizzled, leaving latecomers with marked losses when rates corrected. In Vietnam, exporters in the garment, electronics, and agricultural sectors are already calculating the impact. A stronger dong may hurt margins, but it also reduces pressure on input costs for firms dependent on imported machinery and components. In Iraq, where oil revenues dominate, a stronger dinar might help stabilize prices and reduce inflation, albeit at the cost of competitiveness in external markets. Families living in the capitals watch their purchasing power shift, as basic goods, rent, and services appear to cost slightly less, fractionally easing day-to-day budgets. International bodies are taking note. Policy watchers at the IMF and World Bank are said to be quietly monitoring the situation, perhaps readying observations or statements. A managed revaluation of these currencies could signal structural economic reforms, improved fiscal discipline, deeper integration into global systems. It could be a turning point, yet the default posture remains caution. Without explicit announcements, global institutions remain objective observers. As midday passes, we're seeing further confirmation in interbank data, VND and IQD trades showing consistent upward drift, with spreads narrowing, volume rising. The rhythms of market microstructure suggest something more than sporadic speculation. Still, as we speak, traders are adjusting stop-loss orders, rebalancing portfolios, hedging exposures. The phrase volatile environment is echoing along trading desks. Amid all this, analysts are publishing rapid notes, some hedging their tone, others more bullish. One investor memo, circulating anonymously, reads, "This appears today like a classic breakout. If the central bank does not intervene in the next 24 hours, we could see a further leg up." Another suggests caution. We've seen sudden bursts in emerging market FX before that reversed when fundamentals couldn't support them. Both points hold merit. Communications teams in financial ministries are presumably preparing statements. No change in policy, or rates are market determined, or no intervention planned. Each phrase would carry enormous weight, each nuance dissected in real time. A single press release, tweet, or interview could flip the narrative, sending the move into overdrive or sparking a wave of profits-taking. In short, the question reverberating across Forex boards, WhatsApp groups, and the trading rooms of global banks is this. Is this the long-talked-about revaluation of the Vietnamese Dong and Iraqi Dinar? Or is it merely a sharp, temporary repricing driven by speculative fervor? For now, the data says that both currencies have leapt. The cause remains unclear. And until we see a consistent policy signal to hold or harness this move, we remain in the realm of possibility and caution. Financial watchers in regional capitals are instructing clients to tread carefully. Advisories urge prudence, set realistic expectations. Don't assume that today's surge signals a long-term trend. At the same time, every big currency story contains its share of true believers. Some believe that decades of managed exchange discipline have underpriced these currencies, that a revaluation, if real, could mark a watershed, not just for currency traders, but for the structural economic path of both nations. Now, as this broadcast closes in on the 10-minute mark, the momentum has not faded. On the contrary, it's accelerated. VND appears up by a clear percentage today against key reference currencies, IQD likewise. We don't have exact numbers in front of us, and they're shifting second by second. Markets are fluid. We remain on standby, watching every hint, every statement, every shift in liquidity. To viewers across Southeast Asia, the Middle East, and beyond who hold dong or dinar, now is the moment of decision, of vigilance. Watch your local rates, consult trusted advisors, but know this. You are living through a rare episode of sudden currency movement that could have lasting effects. Whether this becomes a historic turning point or a footnote in speculative lore depends on what policymakers do next, what markets believe next, and ultimately what you do next. That's our report for now on this breaking surge in Vietnamese Dong and Iraqi Dinar exchange rates. Stay tuned for updates, regardless of how rapidly the story unfolds. We'll return in moments with any official responses, deeper analysis, and commentary from global currency strategists. In a world defined by financial flux, today's moves may prove memorable. Thanks for watching.